Chris Zaccarelli, Independent Advisor Alliance. Good morning, Chris, and thank you so much for joining us.
Good morning. Thanks so much for having me back.
Well, Chris, it looks like that numbers are totally in line with expectations. Of course, I'm talking about a PCE price index. So I was wondering, what are your thoughts?
Well, as we look at the numbers, clearly the fact that PCE numbers are not going up much faster than expected is a positive development. Although, looking at the core PCE of 3.6%, that's well above the 2% that the Fed would like to see on average. So the real question on everyone's minds really is the increased inflation somewhat temporary due to one-off factors due to the COVID crisis and supply chain issues that we're seeing, or is it something a little bit more persistent? And I think that question will really determine where markets go over the next few years, not just over the next couple months.
I was wondering, the numbers that we're witnessing today, what are they saying about the Fed credibility? Because ECB's credibility is a little bit under attack here in Europe because of the power grid crisis that we're witnessing and the inflationary pressures to the upside. We just got new all-time record highs numbers today. I was wondering, what are these numbers suggesting about the Fed credibility?
Well, so far, the U.S. Federal Reserve has really maintained their credibility. You just look at our bond yields staying relatively low, and you look at the stock market, which until September has done very, very well. So I think if you're looking at financial markets, there's still a lot of confidence that the Fed has things under control and that they're really monitoring the situation and doing what's expected. So at least for now, and this is good for all of the world, not just the U.S. Federal Reserve, clearly has the confidence of financial investors worldwide. Now, on the ECB side of things, remember the ECB for the longest time has been fighting deflation. So now we're seeing inflation, which obviously is the opposite. And I don't think anyone in Europe, or especially in the ECB, wants to see inflation this high. So I think the question again remains, will these be somewhat one-off temporary price shocks, which obviously prices won't necessarily come back down from here, but will the rate of change continue to move higher? And so at least for now, I think the ECB is watching things very closely, and they're going to have to start tapering and or raising rates themselves if this persists, and that could be a real problem for markets. But again, I think that's a 2022 story, not necessarily a 2021 story, given that we only have one quarter left in this year.
In regard to the Fed tapering, which looks like it's imminent, how do the guys find equilibrium between slowing economic growth and on the other side, inflationary pressures to the upside?
That's a really important issue, and I think tapering is something that's been discussed for a long time. The Fed has done a really good job communicating the fact that at some point they're going to need to withdraw some of the fiscal stimulus, some of the monetary accommodation that they've been putting into the economy. And so they're trying very, very hard to separate the idea of tapering, which is just reducing the amount of excess purchases that they're making of treasury bonds and mortgage-backed securities versus rate hikes. And as long as the Fed is successful in really separating those two issues, tapering from tightening, they're going to be successful in their communication strategy and the market will be fine with it. But ultimately, the economy has strengthened. It is getting stronger. The idea that you need to buy $120 billion of securities per month does not make sense now versus what we were seeing last year when it was, of course, much more necessary. So I think the Fed really needs to move ahead with their tapering plans, and to the extent that they're successful in separating that tapering from tightening, I think the markets will adjust it. It is the right thing to do at this point in the economic cycle, and really where we go from here will depend on how well they're able to communicate that strategy, as well as their credibility. Back to your original point, that's critical to what we're seeing in financial markets.
So what's the source for the next leg of economic growth, in your opinion, in the U.S.?
So in the U.S., we really need to see some of these fears around the Delta variant, some of those demand fears, and some of those slowdowns to the economy happen. But we also have to keep an eye on inflation. It's going to be a balance, and to the extent that companies are able to manage some of these supply shocks and these supply price shocks, which we're looking at through the PPI, which we'll see in a couple weeks. That's going to be really the key to making sure that while demand comes back to normal, which is what we expect as we peak with the COVID numbers and hopefully come back down and get a little bit back to normal in terms of consumption and consumer spending, what we really need to see are companies able to navigate these price increases. We think currently our view is that they're going to be able to navigate this. To some extent, they're going to raise prices and consumers will pay higher prices. To some extent, companies are going to have to take on less margins. And in other cases, I think companies are just going to be a little bit more efficient with their supply chain and really try to navigate what we're working through. But it's a complicated issue. It's one that's very critical to economic growth, but it is one that we think that U.S. companies and hopefully European and Asian companies can navigate as well, because all three continents are facing the exact same challenges, just in different ways.
I was wondering, do you think that Powell has a chances actually for a second term? Because Elizabeth Warren, the Senator Elizabeth Warren, has been really harsh with him.
Yes, I mean, Elizabeth Warren has been a very vocal antagonist of Chairman Powell, just most recently when he was on Capitol Hill. However, I do think he has a very good chance of being reappointed. And the reason I say that is there's a lot of precedent for Fed chairs to get reappointed, regardless of who appointed them in the first place. And so your viewers may not realize, but actually President Barack Obama is the one who appointed Chairman Powell to the Federal Reserve in the first place. Now, obviously, President Trump elevated him to chairman, and so there's an aspect of him being considered somewhat of a Republican Federal Reserve chair. However, there's precedent in the past for chairs to get reappointed, regardless of who's in power. And I would say Janet Yellen, who's the Treasury Secretary and a former federal chair herself, has endorsed him. And so I think that's a very strong step. And I think that's why Chairman Powell has a very good chance of being reappointed. But there are a lot of politics at play. Elizabeth Warren and the progressive wing of the Democratic Party clearly want to see someone else appointed as chair. I would hope, for the sake of markets and really for the sake of the U.S. economy, that he is reappointed, because he's really shown himself to be a great Fed chair in terms of reacting to very difficult crises, such as like the one we saw last year. And he clearly is able to communicate very effectively, and he seems to work very well in getting consensus within the Federal Reserve. And those are important qualities in a Fed chair, and he really does deserve a second term, in our opinion.
I'd like to touch on another topic which is extremely interesting. Of course, we're talking about the situation in Congress. Congress avoided a government shutdown yesterday, hours before funding would have lapsed. President Joe Biden signed a short-term appropriations bill that will keep the government running through December the 3rd. Washington had to beat a midnight Thursday deadline to prevent a shutdown of some federal operations. In a statement after he signed the measure, Biden said it meets critical and urgent needs of the nation. He added that there is no much more to do at this point. I was wondering, Chris, certainly a default sounds kind of incredible, or at least outside of the United States. Are you concerned about the current situation in Congress?
I'm definitely concerned with what's happening in Congress. And to your point, they were able to avoid a government shutdown, which is great. They did meet the deadline of last night at midnight, and they just really kicked the can down the road until December. So unfortunately, this is another crisis that we're going to have to reconfront in just a couple months. But on top of that, there's also the debt ceiling. And according to the Treasury, the debt ceiling must be raised by October 18th, which is just a few short weeks away. And unless they do that, then we could have a situation where the U.S. Defaults on their debt, at least from a technical point of view. Clearly we don't want this to happen. The debt limit has been raised close to 100 times. So there's plenty of historical precedent for Congress getting it done. But right now there is quite a battle between Republicans and Democrats about who's going to be raising the debt ceiling and how they're going to do it. And that does pose a risk for markets. We do believe that the debt ceiling will be raised. In the event that they were even a couple days late, I think that would be a shock to markets. But there are ways for the Federal Reserve to address the situation. And so I don't think anyone truly believes that the full faith and credit of the United States will be in doubt, at least in the long term. But in the short run, it is an additional challenge to the markets and an additional threat to the situation that we find ourselves in. And Congress is juggling a lot of tasks, and they're struggling right now, without a doubt.
So do you think this story might have a negative impact on markets in this final quarter of the year?
I think it's very possible. I mean, I know, given that it's the October 18th deadline, at least for the next 17 days, we're going to be wondering whether or not they're going to get this done. Again, based on the fact that it's been done so many times in the past, I think most people's base case is that the debt ceiling will be raised and will avert at least a short-term crisis in terms of debt payments. But the markets are going to worry about it between now and then. And if something does happen where they don't raise the debt limit in time, the debt ceiling, I think that is going to be a real impact in the fourth quarter, and something that I would be concerned about, without a doubt.
Thank you very much, Chris Zaccarelli, Independent Advisor Alliance. Thank you so much for joining us. Have a great weekend.
Thanks, you too.